Hello, ladies and gentlemen, how do you do? I'm your host, Seth Julian. Welcome you to today's briefing. It's big doings this week in the interest rate world. Big doings. The U.S. Central Bank, the Federal Reserve Bank, is going to announce its interest rate decisions on Wednesday, 1900 GMT, as will the European Central Bank on Thursday at 1315 GMT. Now, what does this mean? This means that they are going to decide at what rate they're going to charge the banks in the banking system under their jurisdiction for money. Certainly not the rate you and I will get on our loans, but this means that the cost of capital is expected to rise, in the case of the United States, by 0.25%. Its current rate is 4.5%. It's expected to rise by what they call 25 basis points, or 0.25%. What this means is, of course, in the event that it does rise, and we expect it to rise, and it's very possible that it will rise more than that. The market is notoriously underestimating how serious the central banks of the world are. This is a rate of the US dollar index, an index of the strength of the US dollar against 6 major trading currencies. As you can see, it's descended quite seriously from November or so, when inflation clearly kicked in and the central bank decided to grapple with it, and therefore the value has somehow fallen down. Did I say November? I might be wrong about that. Let me just check. Yeah, no, this is November of 22. Notice here that in the last 2 weeks it's been in a trading range. Volume has increased. This tells us that the battle between the bulls and the bears is heating up. A lot of volume, longer tails on those candlesticks, and shorter candlesticks bodies. That means that the battle is strong. There's a dispute between the bears and the bulls about the value of the US dollar. We are of the opinion that come Wednesday, this is going to continue its upward trend. Now, it's making a decided effort. It's approaching the 20-day moving average, quite far from the 50, and certainly a mile away from the 200-day moving average. But when this does return, we can expect a change for all dollar-based or dollar-related pairs. In other words, this is the dollar index. This is not a trading pair. However, if we go to some of the pairs, we will see where this could influence. We're not certainly positive that it will come out this way. This is speculation, and therefore we could be wrong. And therefore you should only be trading with money you can afford to lose in the capital markets. But if we take a look at the dollar yen, for example, or the euro dollar, here's euro dollar. As the dollar has weakened, obviously euro dollar has gone up. We expect this trend to adjust and modify. We expect this to continue its downward slope in reaction to the strengthened dollar, which is likely as a result of increased interest rates. And the calculations there are simple. As the interest rate rises, the demand to hold assets in that more valuable currency from an interest rate point of view goes up. If I can just park my money in a U.S. account and earn the interest rate on it without having to do anything, without having to trade, without having to listen to anybody, there are many people who will choose to do that. And that demand is reflected in the in relative strength of the dollar to the other currencies. So we think the euro dollar is going to continue its long-term secular trend. If we narrow this down and give ourselves a bigger data set, we see that by we'll call it the spring of 2021, a year after the pandemic broke out, the U.S. dollar strength is just unbelievable. It goes from a 121 handle to a 1 handle. The euro weakens radically against the U.S. dollar, and we've seen an adjustment, a correction in that trend for the last few months, and we expect the secular trend to resume quite shortly. So that's our perspective on U.S. dollar strength, ladies and gentlemen. Beware, stay tuned for our live trading event. On Wednesday, we're going to have a live trading event right before the Fed announces its decision. I'll send you a link in the mail. And so I'm your host, Seth Julian, wishing you all, ladies and gentlemen, the ability to trade with confidence. Kalas for now.